10 crores. This would help in enhancing income of cooperative societies and its members who are mostly from the rural and from farming communities. Tax relief to persons with disability. The parent or guardian of a differently abled person can take an insurance scheme for such person. The present law provides for deduction to the parent or guardian only if the lump sum payment or annuity is available to the differently abled person on the death of the subscriber, that is the parent or the guardian. There could be situations where the differently abled dependent may need payment of annuity or lump sum amount even during the lifetime of their parent or guardian. I propose thus to allow the payment of annuity and lump sum amount to the differently abled dependent during the lifetime of the parent and guardians, that is parent or guardians, attaining the age of 60 years. Parity between employees of the state and central governments. At present, the central government contributes 14% of the salary of its employee to the National Pension System, NPS, Tier 1. This is allowed as a deduction in computing the income of the employee. However, such deduction is allowed only to the extent of 10% of the salary in case of employees of the state governments. To provide equal treatment to both central and state government employees, I propose to increase the tax deduction limit from 10% to 14% on employers' contribution to the NPS account of state government employees as well. This would help in enhancing the social security benefits of the state government employees and bring them at par with central government employees. Incentives for startups. Startups have emerged as drivers of growth for our economy. Over the past few years, the country has seen a manifold increase in successful startups. Eligible startups established before 31/3/2022 had been provided a tax incentive for 3 consecutive years out of the 10 years from incorporation. In view of the COVID pandemic, I propose to extend the period of incorporation of the eligible startup by 1 more year, that is up to 31/3/2023, for providing such tax incentives. Incentives for newly incorporated manufacturing entities under concessional tax regime. In an effort to establish a global competitive business environment for certain domestic companies, a concessional tax regime of 15% was introduced by our government for newly incorporated domestic manufacturing companies. I propose to extend the last date for commencement of manufacturing or production under Section 115B AB by 1 more year, that is from 31st March 2023 to 31st March 2024. Scheme for taxation of virtual digital assets. There has been a phenomenal increase in transaction in virtual digital assets. The magnitude and frequency of these transactions have made it imperative to provide for a specific tax regime. Accordingly, for the taxation of virtual digital assets, I propose to provide that any income from transfer of any virtual digital asset shall be taxed at the rate of 30%, 30%. No deduction in respect of any expenditure or allowance shall be allowed while computing such income except cost of acquisition. Further, Loss from transfer of virtual digital asset cannot be set off against any other income. Further, in order to capture the transaction details, I also propose to provide for TDS on payment made in relation to transfer of virtual digital asset at the rate of 1% of such consideration above a monetary threshold. Gift of virtual digital asset is also proposed to be taxed in the hands of the recipient. Litigation management to avoid repetitive appeals by the department. It has been observed that a lot of time and resources are consumed in filing of appeals which involve identical issues. Taking forward our policy of sound litigation management, I propose to provide that if a question of law in the case of an assessee is identical to a question of law which is pending in the appeal before a jurisdictional high court or Supreme Court, in any case, the filing of further appeal in the case of this assessee by the department shall be deferred till such a question of law is decided by the jurisdictional high court or the Supreme Court. This will greatly help in reducing the repeated litigation between taxpayer and the department. Taking forward our efforts to further promote the IFSC, I hereby propose to provide that income of a non-resident from offshore derivative instruments or over-the-counter derivatives issued by an offshore banking unit, income from royalty and interest on account of lease of ship, and income received from portfolio management services in IFSC shall be exempt from tax subject to specified conditions. Rationalization of surcharge. In the globalized business world, there are several work contracts whose terms and conditions mandatorily require formation of a consortium. The members in the consortium are generally companies. In such cases, the income of these AOPs has to suffer a graded surcharge up to 37%, which is a lot more than surcharge on the individual companies. Accordingly, I propose to cap the surcharge of these AOPs at 15%, 15%. Further, the long-term capital gains on listed equity shares, units, etc., are liable to maximum surcharge of 15%, while other long-term capital gains are subjected to a graded surcharge which goes up to 37%. I propose to cap the surcharge on long-term capital gains arising on transfer of any type of assets at 15%. This step will give a boost to startup community, and along with my proposal on the extended tax benefits to manufacturing companies and startups, reaffirms our commitment to Atmanirbhar Bharat. Clarification in relation to health and education cess as business expenditure. The income tax is not an allowable expenditure for computation of business income. This includes tax as well as surcharges. The health and education cess is imposed as an additional surcharge on the taxpayer for funding specific government welfare programs. However, some courts have allowed health and education cess as business expenditure, which is against the legislative intent. To reiterate the legislative intent, I propose to clarify that any surcharge or cess on income and profits is not allowable as business expenditure. Deterrence against tax evasion. Honorable Speaker, sir, presently there is ambiguity regarding set-off of brought forward loss against undisclosed income detected in search operations. It has been observed that in many cases where undisclosed income or suppression of sales, etc., is detected, payment of tax is avoided by setting off of losses. In order to bring certainty and to increase deterrence among tax evaders, I propose to provide that no set-off of any loss shall be allowed against undisclosed income detected during search and survey operations. It has been noticed that as a business promotion strategy, there is a tendency on businesses to pass on benefits to their agents. Such benefits are taxable in the hands of the agents. In order to track such transactions, I propose to provide for tax deduction by the person giving benefits if the aggregate value of such benefits exceeds 20,000 rupees during the financial year. A few other changes are being made, the details of which are there in the finance bill. Indirect taxes. So, remarkable progress in GST. GST has been a landmark reform of independent India, showcasing the spirit of cooperative federalism. While aspirations were high, there were huge challenges too. These challenges were overcome deftly and painstakingly under the guidance and the oversight of the GST Council. We can now take pride in a fully IT-driven and progressive GST regime that has fulfilled the cherished dream of India as one market, one tax. There are still some challenges remaining, and we aspire to meet them in the coming year. The right balance between facilitation and enforcement has engendered significantly better compliance, and enforcement has engendered better compliance. GST revenues are buoyant despite the pandemic. I would bring in something which I've got to know this morning, not part of my speech, but worth putting in here for the knowledge of the Honorable House. I would like to bring to the notice of this House. That the gross GST collections for the month of January 22 are rupees 1,40,986 crores, which is the highest since the inception of GST. This has been possible due to rapid economic growth recovery post-COVID. This has been possible due to the rapid economic recovery post-COVID, as well as various policy and administration undertaken by central and state tax administrations. Taxpayers deserve applause for this growth. Not only did they adapt to the changes, but enthusiastically contributed to the cost of paying taxes. Special economic zones. In part A of my speech, I have referred to the proposed reforms in SEZs. Alongside, we will also undertake reforms in customs administration of SEZs, and it shall henceforth be fully IT-driven and function on the Customs National Portal with a focus on higher facilitation and with only risk-based checks. This will ease doing business by SEZ units considerably. This reform shall be implemented by 30th September 2022. Customs reforms and duty rate changes. Customs administration has reinvented itself over the years through liberalized procedures and infusion of technology. Faceless customs has been fully established. During COVID-19 pandemic, customs formation have done exceptional frontline work against all odds, displaying agility and purpose. Customs reforms have played a very vital role in domestic capacity creation, providing level playing field to our MSMEs, easing the raw material supply side constraints, enhancing ease of doing business, and being an enabler to other policy initiatives such as PLI and phased manufacturing plans. My proposal on customs side are aligned to these objectives. Project imports and capital goods. National Capital Goods Policy 2016 aims at doubling the production of capital goods by 2025. This would create an employment opportunities and result in increased economic activity. However, several duty exemptions, even extending to over 3 decades, in some cases have been granted to capital goods for various sectors like power, fertilizer, textiles, leather footwear, food processing, and fertilizers. These exemptions have hindered the growth of the domestic capital goods sector. Similarly, project import duty concessions have also deprived the local producers of a level playing field in areas like coal mining projects, power generation, transmission, or distribution projects, railway and metro projects. Our experience suggests that reasonable tariffs are conducive to the growth of domestic industry and make in India without significantly impacting the cost of essential imports. Accordingly, Honorable Speaker, sir, it is proposed to phase out the concessional rates in capital goods and project imports gradually and apply a moderate tariff of 7.5%. Certain exemptions for advanced machineries that are not manufactured within the country shall continue. A few exemptions are being introduced on inputs like specialized castings, ball screw, and linear motion guide to encourage domestic manufacturing of capital goods. In the last 2 budgets, we have rationalized several customs exemptions. We have once again carried out an extensive consultation, including by crowdsourcing. As a result of these consultations, more than 350 exemption entries are proposed to be gradually phased out. These include exemptions on certain agricultural produce, chemicals, fabrics, medical devices, and drugs, and medicines for which sufficient domestic capacity exists. Further, as a simplification measure, several concessional rates are being incorporated in the customs tariff schedule itself instead of prescribing them through various notifications. This comprehensive review will simplify the customs rate and tariff structure, particularly for sectors like chemicals, textiles, and metals, and minimize disputes. Removal of exemption on items which are or can be manufactured in India and providing concessional duties on raw material that go into manufacturing of intermediate products will go many a step forward in achieving our objective of Make in India and Atmanirbhar Bharat. I shall now take up specific sector-specific proposals. Electronics. Electronic manufacturing has been growing rapidly. Customs duty rates are being calibrated to provide a graded rate structure to facilitate domestic manufacturing of wearable devices, hearable devices, and electronic smart meters. Duty concessions are being given to parts of transformer of mobile phone chargers and camera lens of mobile camera module and certain other such items. This will enable domestic manufacturing of high growth electronic items. Gems and jewelry. To give a boost to the gems and jewelry sector, customs duty on cut and polished diamonds and gemstones is being reduced to 5%. Simply sawn diamond would attract nil customs duty. To facilitate export of jewelry through e-commerce, a simplified regulatory framework shall be implemented by June this year to disincentivize import of undervalued imitation jewelry. The customs duty on imitation jewelry is being prescribed in a manner that a duty of at least 400 rupees per kg is paid on its import. Chemicals. Customs duty on certain critical chemicals, namely methanol, acetic acid, and heavy feedstocks for petroleum refining are being reduced, while duty is being raised on sodium cyanide, for which adequate capacity in the domestic arena exists. These changes will help in enhancing domestic value addition. MSMEs. Duty on umbrellas is being raised to 20%. Exemption to parts of umbrellas is being withdrawn. Exemption is also being rationalized on implements and tools for agricultural sector which are manufactured in India. Customs duty exemption given to steel scrap last year is being extended for another year to provide relief to MSME secondary steel producers. Certain anti-dumping and CVD on stainless steel and coated steel flat products, bars of alloy steel and high-speed steel are being revoked in larger public interest considering prevailing high prices of metals. To incentivize exports, exemptions are being provided on items such as embellishment, trimmings, fasteners, buttons, zipper, lining material, specified leather, furniture fittings, and packaging boxes that may be needed by bona fide exporters of handicrafts, textiles, leather garments, leather footwear, and other goods. Honorable Speaker, sir, duty is being reduced on certain inputs required for shrimp aquaculture so as to promote its exports. Tariff measure to encourage blending of fuel. Blending of fuel is a priority for this government. To encourage the efforts for blending of fuel, unblended fuel shall attract an additional differential excise duty of rupees 2 per litre from first day of October 22. A few other changes are being made in duty rates, customs, tariff, and customs law, the details of which are there in the finance bill. Mr. Speaker, sir, with these words, I commend the budget to this august House. Thank you.
Item number 2, Srimati Nirmala Sitharaman ji.
Sir, with your permission, I rise to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management FRBM Act 2003. Medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.
Item number 3, Vitt Videk 2020, Nirmala Sitharaman ji.
Sir, item number 3, Finance Bill. Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2022.
प्रश्न है कि वित्त विधेयक को प्रस्तावित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें, मेरे विचार में निर्णय